Hey guys, for more like this, don't forget to hit the subscribe, the like button, and the notification bell. And just a reminder that with Kinesis, your allocated, audited physical gold and silver is digitized so that you can spend it in any store, and also gives you access to a number of cryptocurrencies. Hey guys, my name is Kevin Wadsworth from NorthStarBadCharts.com, and I'm here today to talk to you about cryptos, and I'm here to talk to you about the precious metals and the relationship between the two and what that's telling us about both of those markets. I'm about to show you a chart that I don't think anybody has put out there for you, and it gives some really useful information for both the crypto market and for the precious metals market and the relationship between the two. What I want to do really is look at this from a scientific point of view. I'm not interested in narratives. I'm not interested in fundamentals. I'm interested in analysing the facts and analysing the weight of evidence. I'm a scientist by nature. It's my training, my background, 34 years in the world of science and predictive forecasting. So I'm not a gold bug. I'm not a precious metals bug. I'm not a crypto bug either. I'm interested in maximising the gains from the markets and in facing the facts, whatever those facts happen to be from a scientific and technical point of view. So let's dive straight in. Let's take a look at the chart. I'm going to share my screen. So if you give me a moment to switch my screen sharing on so that you can see what I'm seeing. And I'm going to turn my camera off because you don't want to be distracted by me whilst I'm talking. So I'll just stop the video camera there. Okay, so what are we looking at? We're looking at the chart here for crypto total market cap in gold, priced in gold. So this is cryptos versus gold, you can think of it as, I suppose. And so we are tracking from 2014 how cryptocurrencies have performed versus gold. And over that entire period, there's no denying that from 2014 to where we are now, cryptocurrencies have had an incredible run and have moved up very strongly. In fact, there's one support line on here, one key line that I'm just wondering about putting on the chart, which is going to be important as well, and it's that one there. Okay, so what do I want to tell you about this chart? Well, so far I haven't told you anything you don't already know, I suppose, and that is that cryptocurrencies have outperformed gold over this time period. When the chart goes up, cryptocurrencies are winning. When the chart goes sideways, they're both performing equally as well or equally badly. And when the chart goes down, gold is the winner. It's important to notice on this ratio chart, because this is a ratio of crypto total market cap to gold. It's important to note that when the chart is moving up, it's telling you that cryptos are doing better than gold. And that could be by gaining more, or it could be by losing less. It doesn't tell you whether the individual prices are going up or down. It just tells you which of those two you want to be holding. And through this period from 2014 through to 2018, you want to be holding cryptos. And from 2018 to, let's say, 2020, you want to be holding gold. And then from 2020 to 2021, late 2021, you want to hold cryptos. And then from then to now, you want to be holding gold. Okay, still, I haven't told you anything that you probably don't already know. But what I'm about to show you and tell you, I think will give you a new way of looking at this. Okay, let's dive straight into it. The critical support line is exactly that, it's critical. You notice in the last bear market, we did not come down to test the breakout level from the previous bear market. Okay, this was the bear market in 2019 through to 2020. We did not come all the way down here. The current bear market is testing the horizontal support level from the previous bull market highs. You see the bull market highs here that capped this entire bear market back in 2014 and 15. The same thing here from 2018 to 2020. The highs of the bull market capped that entire period, and then we had this breakout that took us to the bull market highs. Okay, that's fine. We had the breakout back in 2020. How did we know that that was the breakout to buy and not this breakout here in 2019? Because if you bought the breakout in 2019, you had a nice little move and then it gave it all back and went to new lows a year later. So that's a lot of time wasted when your capital could have been invested somewhere else. this was the actual breakout of importance in 2020. So how could we identify that was important? Well, let's take a look at an indicator that you probably don't see many analysts using. I certainly don't see many people using it. I think Michael Oliver at MSA uses it to great effect and is well known for it. But this is the, you can use this technique with distance from moving average indicator on TradingView, and you can also use it with a rate of change indicator. I'm using it here with a rate of change indicator, and I've customized it to a 24-period rate of change with its 18-month moving average. That's the green line. And the thing with these indicators is that you can adjust the settings, customize them to get the signals that you want to get from your indicators. Do not be told by anybody that you have to use particular time periods for particular charts. That's absolute hogwash. You can customize the moving averages and the indicators to give you the signals that are appropriate to the chart that you're looking at to get the most information and the most useful information that you want to. And it turns out that with this particular chart, by using the 24-period rate of change and the 18-month moving average, you get a very good signal for the breakdown back in 2018. And you'll notice that this breakout, in inverted commas, in 2019 occurred when the rate of change was way, way below its 18-month moving average. There's no bull signal given there. The bull signal was given here, excuse me, given here in late 2020 when the breakout actually occurred. Okay, very, very useful information. What is it telling us now? Well, it's telling us now that the rate of change indicator is actually starting to move below the 0 line. Okay, and the 18-month moving average on that rate of change indicator is still heading in a downwards direction. And that's not a bullish configuration. And looking at the upper chart here, what we notice is that we are now below this rising, very, very important support line. We've broken below it, which is showing a loss of momentum, telling us there's a loss of momentum, because up until now, we've been able to stay above that line. And we're now below this. I'll make it a different color so you know the line I'm talking about. This red line here. Okay, we are below that red line. We've also gone below this dotted black line here, and we've back tested it, and we're starting to develop a red candle here. Now, all of these are bad signs for crypto in relation to gold, and they're good signs for gold in relation to crypto. Now, what we do know is that if we end up with a candle that takes us below critical support, we're in entirely new territory for crypto versus gold. Bad for crypto, good for gold if that happens. Let's take a look at another indicator here, and I'm going to show you the stochastic RSI indicator, which is used more commonly and more widely. Let me just extend these up a little. I'll extend this indicator up so you can see what I'm talking about. Okay, and I can probably move that one down now. There we go. So what is this stochastic RSI indicator telling us on the monthly chart? This is the monthly chart. Each one of these candles represents a month. Okay, well, what it's telling us is that in the previous bear market, the stochastic RSI indicator came up to around about a reading of 80. Okay, the top of this blue zone came up to a reading of 80 when it had completed its bull trap, if you want to call it a bull trap, before it then gave up all of those gains and went to a new low. It moved up to 80, and then it came down to test this support zone, the lower part of this red shaded support zone. That's very different to what's happening at the moment, because we are coming up from the bottom into this support. Well, it's actually a resistance zone because we're below it. So support and resistance zone. We're coming up into this resistance zone, and notice what's happening at the moment. Look at the indicator curling down on the monthly time frame, just as we're hitting critical resistance and just above the critical support line. I'm going to put some other things on the chart now. I'm going to show you the 12-month and the 36-month moving average. Excuse me. And they have crossed over. That shows a loss of momentum, although it doesn't necessarily on its own, it isn't necessarily on its own a bad thing, because look back here, we had a crossing over of the 12 and 36-month moving average. And although, yes, we went on to make a new low, it was temporary. and we moved up into a bull market. So yes, we might make a new low, but it's not necessarily telling us it's the end of the world for cryptocurrencies. It's just one small piece of the jigsaw puzzle. Why it's very important not to just rely on one piece of data. Now let's look at the Ichimoku cloud, which is a Japanese indicator that is very good at showing support and resistance levels on the monthly chart. And when price breaks up through the Ichimoku cloud, it often does it at a weak spot. What do I mean by a weak spot? Well, you'll notice that the Ichimoku cloud is thick and red here. The weak spot is where you get a very thin patch in the cloud, and it's often where it moves from green to red. So you can see the red-green transition here, and price punched right through it. Now, what's happening at the moment is we've got a very thin Ichimoku cloud here, okay, and price is actually moving below it. It's punching through the support from the Ichimoku cloud. If we start to move down here, we will be very clearly below the Ichimoku cloud. Notice the cloud out in the future here is turning red. So when you get this red, this sort of red projection, it's not a good sign, because we've got this red projection over here when the price was moving down. I don't want to get too technical with this, but in summary, being in a position where you're punching through a thin portion of the Ichimoku cloud, when you're below key moving averages, below a key breakdown line, these are all bearish signals that the chart is sending. Finally, one other thing, if you want to get a little bit more granular detail on a chart, you can zoom in on the time frame. We're looking at the monthly candles here, but in terms of the stochastic RSI, let's take a look and see if we go down to the 3-week candles, gives us a little bit more data and a little bit more of a heads up as to where we might be heading. So if I click on the 3-week chart, we can see the stochastic RSI giving perhaps some clearer signals. The crypto market in particular, because of its reduced price history, gives better signals on weekly, 2-weekly, 3-weekly candles than it does on its monthly candles. The cycles are shorter, and if you just rely on the monthly candles, then you end up sort of missing the train quite often. The train's left the station, if you like. And we can see very clearly on the 3-week candles here what's happened. The stochastic RSI has hit its head on the ceiling there, a reading of 100. And from that point onwards, you can either stay at 100 for a while in a bull market, or you begin to turn down pretty quickly, and price follows very quickly with it. When I say price, I mean, in this case, of course, the ratio chart, crypto versus gold, moving down. You can see here we stayed in the high zone for a long period of time, and that allowed the bull market to ensue. We never got a turn down on the RSI. This is why I don't like the term overbought and oversold, because if you thought this was oversold down here and used it as an indicator to get out, then you're only looking at one tiny piece of the jigsaw puzzle and failing to acknowledge the fact that you can stay in the oversold area for, in this case, I think it was, what was it, March 2018 to February 2000, almost a year in this so-called oversold zone, and the same up here in the overbought zone. It's not overbought or oversold, it's the turbo zone and the dumping zone. Okay, if you're up here, you're in the turbo zone where price can move up significantly and rapidly, and the opposite when you're down here. So this is giving us a signal here. It's giving us a signal that it doesn't want to stay up in the upper zone for a long period of time. That's the sign it's giving at the moment. So putting all of these pieces of the jigsaw puzzle together, the stochastic RSI, the rate of change indicator, the fact that we're breaking down below critical support levels at the moment, this red dotted line, the Ichimoku cloud. What I would say in summary from everything that I've told you here and everything that I've shown you here is that if you're long cryptos, you have to be very, very cautious, and you have to have very tight stop losses. I wouldn't be long cryptos at the moment in this particular situation, particularly given that we've had a nice move to the upside recently and are starting to pull back. And with all the signs and the indications here, I would say the probabilities are, the scientific probabilities are favoring gold, or continuing to favor in gold. I should say they began to favor gold when we had the breakdown here in early 2022, and we told our subscribers and we posted it on Twitter and told everybody about that, and that was our view. That proved to be correct. We weren't the only ones to spot this breakdown, so I'm not going to say that I was the only one to see this, but there were others, but there were many people that didn't, and many people that failed to acknowledge that 100k Bitcoin was not going to happen, and that it was time to review forecasts and review predictions. And at the appropriate time, we gave the signal in early 2022, and we've been very, very careful, very, very cautious in cryptocurrencies, and continue to be so, because as long as gold is either performing as well as or better than cryptocurrencies, then there's absolutely no reason to be in cryptocurrencies. And of course, gold is just one element of it, because silver is a spiky metal and at times performs much more impressively. And on top of that, you can leverage those gains with the miners, of course. So there's a variety of ways of playing these moves, not just by investing in gold, but also looking at other ways of leveraging your gains. And until this chart breaks to the upside, as I said at the very beginning, I'm not a gold bull, I'm not a crypto bull, I'm a scientific evidence bull. Okay, my bullishness comes from, or bearishness in any market, comes from the same framework, the same set of rules, the same way of analyzing this chart. You could take away the title, take away the fact that it's crypto versus gold. I don't need to know that, because I'm applying the same set of rules to this chart as I apply to any. So it's completely unbiased, completely factually based. And when this chart moves back above this dotted line here, this black dotted line, then I will be more bullish for crypto versus gold. And particularly, and more importantly, when we move above this line, that is when the real crypto bull market will begin, because we will be moving back above the Ichimoku cloud, and with a bit of luck, we would be back above this red breakdown line. But we remain below the red breakdown line at the moment. We remain below the Ichimoku cloud, below the critical or the next critical overhead resistance line. So combine that with the rate of change indicator that I've shown you, combine that with the stock RSI that I've shown you, and what we've got here is a weight of evidence that tells us that now is not yet the time to be going all in bullish on cryptocurrencies. It is a time to be more optimistic for the prospects of precious metals. And that's where I'm going to leave it today. I hope you enjoyed that analysis. If you did, please put something in the comments. Please subscribe, and please hit the notification bell so you get more notifications when these podcasts go out. It encourages me to do them more frequently. That's it from me. Enjoy the rest of your day, the rest of your week. Take care. Bye-bye.